Hi there, welcome to Kneppy Invest. Let's talk portfolio performance. I'm hoping all viewers of this channel actually do this with their own portfolios, because if you can't see how your portfolio is performing over time, how do you know you have the right strategy? That's just my opinion anyway. Maybe you don't like to see your portfolio going down, so you like to keep your head in the sand, that sort of thing. But I think it's a good idea to track the performance of your portfolio over time. And hopefully you have been tracking it ever since you started investing. If you're not, I highly recommend using something like ShareSite. Now, ShareSite don't pay me to recommend them, so maybe I should actually go to ShareSite and ask for some money. Anyway, so there's a few different websites or platforms, or whatever you want to call them, like ShareSite. Navexel was another one. You could do it yourself, just using an Excel spreadsheet. I used to do that until I found ShareSite. So in today's video, what I'm going to go through is the performance of 4 portfolios, including the group portfolio, which I haven't had a look at recently. For those new viewers of this channel, 2 years ago, I asked viewers of the channel to give me 5 companies. There was maybe 3 companies they thought would outperform the market over the next 5 years, and I've been tracking the performance of that portfolio ever since. It was worth $100,000 at the start of financial year 22, and right now the value of that portfolio is 61,000. So it's down a lot, a fair bit. And the main reason why it's down is because a lot of the chosen companies were story stocks, companies that were not profitable. And unfortunately, even since the start of this financial year, this group portfolio is down negative 2.28%. Nice dividends, some nice dividends coming in. While the overall, or the benchmark, which is the STW, is up 0.66. So overall, we can actually look. You can also look at different time frames. So since first purchase, let's do that. So since first purchase, the overall portfolio is down 17.8% per year. You actually want it to be up about 17.8% per year, not down, while the benchmark, the STW, is up 4.6% with significant dividends, 6.2% per annum dividends for the benchmark. So obviously, if I was a fund manager and I had this portfolio, I would not be well liked among my investors. And as I mentioned before, many of the companies in this portfolio are story stocks. Not only story stocks, a lot of companies in this portfolio are what I would refer to as mature companies, non-growth companies like BHP, Fortescue, Woolworths, BlueScope Steel. CSL's in there as well. There are quite a few companies to like, but you'll notice, and I've just ranked these by performance. Now, the best performing company in the group portfolio is a company no longer with us, Unity Group. That was an awesome buy, but they've been bought out. The next best performing companies: BHP, Fortescue, Woolworths, Soul Pattinson, and BlueScope Steel. Now, the capital gains for all those companies are down, are negative. So the share price has actually decreased over the past 2 years. But dividends are significant. That's why the overall return for those companies is positive. We also have Tower Group, which is a story stock, CSL, Zero, ResMed, A2 Milk, Megaport, which is rebounding. So there's a few companies on this list that are rebounding. Well, Lake Resources is not. Tezzerant, I'm pretty sure there's a takeover bid for Tezzerant, Kogan. Email payments definitely is rebounding. And at the bottom of the list, the worst performing companies in the group portfolio: Zip. And again, 2 years ago, this was in the sector, that was all the rage, and Pointera, and Imogen Biosystems, which I actually don't know much about. We also have Novonix, Ares Resources, Arctis, Credit Intelligence. So overall, unfortunately, group portfolio is not really performing. Now, what I'm also doing is tracking my own portfolios using 3 different strategies since the start of this financial year. And the main reason I actually did that is because I actually decided not to renew my membership with ShareSite, and you can only track, I think it was 1 or 2 portfolios. I decided to continue tracking the group portfolio, and I got rid of my other portfolios, tracking the other methods, Excel. And then I decided, because ShareSite came back to me and said, "I will give you a bit of a discount if you renew," and then I renewed. And I can track, I think it's 4 portfolios. So I'm tracking 3 of my portfolios: a long-term, medium-term, short-term, using different strategies. The long-term portfolio is simply those companies that I want to hold for the long term, because I would consider most of these companies high-quality companies. At this point in time, this particular portfolio is positive, up 3.52% versus the benchmark 0.66. Now, my ultimate aim, goal, what you will, is to at least double the benchmark, because if I can't double or even beat the benchmark, then I might as well just put my money into ETFs. And the ASX 200 is sort of a really good benchmark. I could benchmark against small cap fund or ETF, that sort of thing. But I've decided just to benchmark against the STW, because the STW also provides dividends. And I think you do have to take that into account. Now, at this point in time, yeah, long-term portfolio really outperforming the benchmark since the start of the financial year. And I'm not sure if I mentioned this, I have sold completely out of A2 Milk just because I don't like the direction the company is going. In particular, the management's absolute obsession with China that could really harm the company in the future. I just wish they would diversify. Now, they are or have, well, they moved into USA a few years ago, but I just wish they diversify themselves throughout most of Asia. I'd love to see them try India, because the population there should continue booming, because it is, what's the best word? It's not as developed as China. It's moving in that direction. And I think there's significant growth in store for India, and they'll continue having lots and lots of babies, that sort of thing. But who knows? Maybe they want to get their milk from goats, that sort of thing. Anyway, so the best performing companies in this portfolio. And the other thing I should mention is I own international companies in this, or companies that are listed on overseas exchanges. So I do have a currency windfall or downside, and it's mentioned here. My currency gain is actually 1.5%. So because Australian dollar has gone down, that is beneficial for me holding overseas companies. So the best performing company in this portfolio, Nick Scali, then we have Breville, REA Group, PWR Holdings, Domino Pizzas, Baylor Tech, which I don't think is a high quality company, but I just like the management of that company. JB Hi-Fi, Pro Medicus. I took profits with Phoenix at 31.5 cents. It's now down to 23.5 cents. I might actually buy Phoenix, or Phoenix, I think it's pronounced. Altium, Aristocrat, Zero, Fiducian Group. So some of these companies you might argue with me that they're not high quality. So I think there's a lot of scope in determining what is a high quality company. It's all around your own definition. Don't listen to me about my definition in regards to high quality, because one company here is Telix Pharmaceuticals. Now, this company's revenue has significantly grown over the past year, and I wouldn't refer to Telix Pharmaceuticals as high quality just yet, but I think it definitely will in the future. And the worst performing company is a company I sold, A2 Milk. Also, we have ResMed in this list as well, and I might add to that position because apparently the short selling for ResMed is going bonkers right now, and that's why the share price is falling. We also have WiseTech, Nanosonics, Clinivel, which is a company I was thinking of selling. I was a little disappointed with their full-year results, or also Mineral Resources, CSL, and Corporate Travel. International companies, I'm not sure you could call Volkswagen a high-quality company, but that's mainly for the future. We also have Apple, Adobe, Amazon, Alphabet, Microsoft, PayPal, Tesla, Shopify, not profitable, but definitely that is an investment for the future, and TSM, or Taiwan Semiconductor Manufacturing. I haven't bought any international companies for a while. The only company here that I was thinking of selling was PayPal. They keep disappointing when they release the results, but actually is looking on a valuation metric quite attractive. Now onto my second portfolio, which is a medium portfolio. And this is those companies that I wouldn't define as high quality just yet. But they have that possibility, the potential to become high quality in the future. And if they do, I just transfer those companies to my long-term portfolio. And most of these companies are small cap companies. So someone like Rudy, what's his name? Rudy Vellum, whatever it is, his name is, would not hold these companies. Anyway, the performance of this portfolio up 5%, some nice dividends coming through as well. So significantly beating the benchmark, 5 times the benchmark at this point in time, and some really good performers in this company, some really bad performers as well, I should add. So the best performer companies in this particular portfolio, Doug, Johns Lyng Group. So funny that the first two best performing companies have names in them, like Doug and Johns Lyng Group. And Johns Lyng Group is a company that I can definitely see myself putting into my long-term portfolio. I think this is that company is almost at the point where I would define them, that company, as high quality. Duratec, Ordinate, they just did a capital raising. I'm not going to participate in that particular capital raising. Or Energy One, I should actually, sometimes I'm late, but I have sold Energy One. So the performance of this portfolio is going to be better now because I sold it at $5.62. Share price now $5.25. And Chryso Corp, Visard, Ansarada, IPD Group, Laserbond, Email Payments, Tyro Payments, all these companies are doing really well. But on the bad side, so a lot of companies in this list, and on the worst performing companies, we have Xtech, Ventura Health, I'm not sure about that company, LGI, Frontier Digital, AVA Risk, Cydev, Mount Gibson. In fact, some of those companies are probably more risky than some of the companies that have been very successful, which shows you that risk is not favored right now. Also got Neuron Pharmaceuticals on this list, so I'm going to have to think about adding to my position in that company. Anyway, so very happy with the performance of this portfolio right now. It's doing very well, and I do like some of these. And some of these companies, I have to tell you right now, I am thinking of taking profits because Duratec is a 3 or 4 bagger for me now. Dove Technology is a 3 bagger. And the share price just keeps on rising. And I've got to think, when should I take profits in these companies, if at all? And maybe I should just be using technical signals to take profits for those companies. So someone did ask me the other day whether I was going to sell out of IPD Group, because the share price is still an uptrend, just because of a disappointing full-year results. Maybe it wasn't disappointing. Maybe the management was a little bit more wary about the future. Now on to the whole reason I started to do this tracking of these 3 portfolios since the start of the financial year. I'm becoming more of a technical or chartist. And so I do have a short-term portfolio just using charts. Now, the whole reason I want to compare the performance of these 3 portfolios is just question what sort of strategy I should employ. What strategy suits me? And that is the ultimate goal for every investor. What strategy suits you? If you listen to a lot of podcasts, experts will say there's only one strategy, and that's the strategy I use. That's completely wrong. There are many strategies out there, many strategies that you can be really successful. And a lot of these experts, when they say to their listeners, there's only one strategy you should employ, can be quite harmful, particularly though to those investors who's that type of strategy, and usually that strategy is a long-term hold, buy and hold forever sort of strategy. There's many investors who won't exceed under that sort of strategy. And in fact, there's a lot of investors who are using that strategy who probably should think about maybe looking at charts, that sort of thing, because that sort of strategy, they would succeed and they would thrive. And I just wanted to see if I could thrive under a sort of a technical analysis strategy. And let's have a look at the performance of this strategy. Up 11%. So double in terms of percentage, more than double the medium term. Even some dividends, which is interesting. I didn't expect dividends under this portfolio. And it's really working at this point in time. Now, I have made some mistakes. I said that in the last few videos. I sold out of Bravura and Nuix maybe a little bit too quick just to lock in profits. Megaport just keeps going up. Email Payments, that has gone on a really nice run. Sold out of Kogan. Step One, beautiful. That was a beautiful chart. And just keeps going up. MMA Offshore, ServiceStream, GUD Holdings, Genus Plus, which might belong more in my medium-term portfolio. I sold out of SG Fleet. I probably should put that into this portfolio. In fact, yeah, I thought I did. Okay, I know what I've done. I've made a mistake here. And sometimes this happens to me. So I have sold out of SG Fleet. And instead of saying sell, I actually put a buy. So not much of a profit, but so on the 8th of September, I've said I've bought 1,360 shares. That should be a sell. So let's put a sell there. I do this mistake all the time when I put in new trades. Okay, so let's go back to the short-term portfolio. See how that has benefited me, if at all. Oh, now we're 11.44%. Oh, yeah. Anyway, so I have made 2 transactions in the week in this portfolio. I sold out of SG Fleet for a small profit. It wasn't much, but it was enough. That's the other reason. So a nice little profit, but there was also a dividend. And the share price of SG Fleet just became a little bit too more volatile. The other thing I've noticed is a lot of companies who do go ex-dividend, particularly if they've got a high dividend, share price keeps on dropping because those companies were beloved because of the high dividend yield. And then those income investors then sell out en masse. So I took profits with that, and there was a nice dividend with that. And I have made 1 acquisition in the week. That acquisition might shock some people. Where is it? That company is Australian Ethical. I'm not the biggest fan of Australian Ethical. In fact, I'm not the biggest fan of ethical funds. because I have heard a few ethical fund managers speak, and it horrifies me what they say. In fact, I would classify many of these fund managers as being actually unethical. And I haven't had a look at what actually Australian ethical funds actually hold. And I can guarantee you, if I had a look at what they hold, I would call many of the companies unethical. But I'm the sort of person who thinks most companies are actually unethical. And to be a really good, growing, profitable company, you actually have to be a little bit unethical. And I think what they're doing is brilliant. They just put the name ethical in their fund, and all these Gen Zs and millennials are just buying Australian ethical funds because it's got the word ethical in it. And that's my play. And there's another reason I bought it. It was a short-term reason. We'll have a look at the chart in a second. So let's have a look at some charts. We'll have a look at, not Disney. This is a company I was thinking, oh, maybe I should think about buying Disney. Anyway, so I have a lot of, well, this is going to be slow. So I have a lot of watch lists, but I do have a short-term portfolio watch list. So let's have a look at the company I did sell, simply because SG Fleet. It's not SFG, which is something C, Seafood, Sea Farms Group. I always get it mixed up. It's SGF. Okay, so SG Fleet looked pretty good. Just decrease the size of mine. This is really slow. It looks really good. And then the company went ex-dividend somewhere in here, and the share price just plummeted. And I think most of this rise before it went ex-dividend was just those income investors, because the dividend yield of this company is 6.7%. And that's why the share price plummeted after the company went ex-dividend. And then I just decided to get out. I don't want that sort of volatility. And, the chart looks okay. And the share price has bounced off the longer-term moving average, which actually is a bit of a positive. And it was a really good bounce as well. Share price got down as low as $2.25 on Friday and finished at $2.40. But I decided I don't really want to take a short-term position in this company because I have no idea which way it's going to go. It can be quite volatile, and I don't see any reason why the share price will go on a massive run. Now onto Australian ethical investments. Why have I taken a position in this company? So I put this company onto my watch list a few weeks ago. So the share price had been a downtrend since early 2022. And this is a classic downtrend. So what we want to see is this trend coming to a completion. And anytime the share price moved towards the longer-term moving average, which is the top red shaded area with that blue line, which is 150-day moving average, whenever the share price got into that area or near that area, share price pulled back. So that area is a resistance zone. And then in July, share price got into that zone again, but we didn't see any selling, which is a sign that maybe the bottom has been reached. Not only that, the shorter-term moving average started to move upwards, but we also saw that back in August of last year. But the share price has kept on running, and we have seen 2 higher highs and 1 or 2 lower lows. Not only the share price is now above both moving averages, share price is above 150-day moving average, and the shorter-term moving average is moving above the longer-term moving average. So I do have a buy signal for this company right now, this fund right now. And I don't care about the fundamentals of this company. I would expect this company is overvalued. Price earnings ratio 74.4, ridiculous. The whole reason why it's really overvalued is because people are just putting their money into Australian ethical investment because it's got the word ethical in it. Should I show you any other charts? What should I show you? Oh, Wagner. Wagner had a really interesting week. So I bought very similar to what was happening with Australian Ethical Fund. So we had the share price moving above both moving average channels or ribbons, whatever you want to call it. The shorter term moving average moved above the longer term moving average, which is another signal. And then we saw the share price rise on their release of their results, 22nd of August, it must have been. But most importantly, after the share price rose, and it rose 10.1% in one day, there was no selling. And more importantly, the share price just went sideways for about 10 trading days. That's really, really healthy. That means there's sort of a match between the buying and the selling, and the sellers weren't overwhelming the buyers. And that's really healthy to see share price just consolidate for a little period of time. Some people might call that a flag or a pennant, that sort of thing, which can be a bullish sign. And then all of a sudden, on the Wednesday, the 6th of September, share price rose 11.2% on okay volume. Now, I'm not sure why it did that. There could have been a buy recommendation from a fund or something like that. But that was a really good day. A little bit more volatility has come in the share price the last 2 trading days, but some of that is because of the overall weakness in the market. So this was just a technical signal of the share price going sideways, sort of in a flag or a pennant, after a nice increase in share price of good fundamental news. And this is exactly what I've seen time and time again. And this is really important. In my real job, my professional job, I look for patterns all the time. Pattern recognition is really important. And that is what I'm doing now. I'm looking for patterns that I recognized in the past that gives me a greater chance of success in the future. And this pattern I'm seeing with Wagner's is one of those patterns. So that's why I took a position in Wagner's. I don't necessarily like the company. I don't think it's a long-term buy, and that's why I'm just trading this company right now. And step one, man, this was a classic breakout if you've ever seen one. Now, the only thing I'm a little bit wary is the share price just keeps on rising and on really good volume as well. And eventually we will see some selling coming in. Share price broke above a resistance level at 37.5 cents. I'll still remember that for many, many years because I had an alert system set up in TradingView. And whenever the share price went above or below 37.5 cents, I got an alert on my phone and it just kept buzzing for about a week and a half, maybe 2 weeks. Kept getting these alerts about step one, which means the share price was really struggling, not struggling, but it was trying to get above 37.5 cents. And then eventually it did on a strength. And as soon as it got above 37.5 cents on strength, it took off. It's gone from 37.5 cents to 64 cents. And that run has been over, it really broke out on the 22nd of August. So we're talking about 2.5, 3 weeks. So 1, 2, 3, 4, 5, 6, 7, 10, 11, 12, 13 or 14 trading days. So 3 weeks. Again, so my only worry is that run has been really strong on really good volume. Look at volume. It's been consistent high volume. Volume has started to decrease. And it's just, I think eventually we will see some profit taking in this company. Now, one of the supports, one of the reasons why the share price might be supported is the dividend yield is still 7.8%. And the main reason they put out the dividend, as they say, was because they're very confident about the future of this company. So maybe in fact, they said they're confident about the future of this company. It did motivate some investors to take a position in this company. So that's step one. And that's all I'm going to talk about in this video. If you have any questions about any companies, questions about companies that you think are breaking out, and there was one company someone mentioned to me, and this was it AccuSensus? I might have it wrong. No, it was someone mentioned, have a look at AccuSensus. And the share price really took off a few weeks ago. Share price went from about 70 cents up to 90 cents in about 3 or 4 trading, well, maybe 5 or 6 trading days. My only concern, not a lot of volume with that run up. And then eventually share price pulled back by over 11%, because when you see not a lot of volume, that means, or is telling us, there's not a lot of conviction in that run up, and that can lead possibly to some downside in the future. So interesting, potential breakout for AccuSensus, which probably will become one of the most hated companies on the ASX simply because of what they do. So and I would argue what they're doing is actually quite useful, because you don't want to see people using their phones when they're driving. That's ridiculous. And that's what they do. They're the ones who put the cameras that try to detect people using their phones when they're driving. And I just think people are going to hate this company, but what they're doing, I think, is essential. You could say it's just the government money grabbing, that sort of thing, but I think that does protect people from stupid people who are using their phone when driving. Anyway, that's all I have for this video today. If you do have any questions, that sort of thing, or again, any companies that are like AccuSensus that I've completely missed, I didn't notice what was happening to AccuSensus, just leave that company, that T code, in the comments of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.